Hey everyone, how's it going? It's Dan Russo, the Chief Market Strategist at Chaikin Analytics. Hope everybody's having a good week so far. Happy Tuesday. Wanted to come in with some updated thoughts because I had a subtle shift in my thinking over the past couple of days. Really started to play out over the weekend, and then yesterday's trading activity solidified this shift in my thinking that I have here in the near term. And basically it stems around the fact, if you recall some of our previous videos, we talked about managing risk and how important that is. And in particular, we talked about if the S&P 500 was under 3,400, so if the SPY was under 340, that the odds favored downside to the 325 area for SPY. We subsequently went below the 340 level and then tested 325 yesterday before a late day rally. Took us back to close above that level. So we were looking for that level, and we were also looking for SPY to be oversold when it hit that level. So both of those criteria were met. So why the subtle shift in the thinking? There's more to it than just the price action and the oversold condition of SPY. What really jumped out at me yesterday was number one, the reversal that the Qs had, QQQ, to close higher on the day. Remember, the big tech stocks have been where a lot of the acute pain has been in the market for the past three and a half weeks. But really importantly, what jumped out at me, and I detailed this in my note to clients today, is the semiconductors. The SMH, the VanEck Vectors Semiconductor ETF, is beginning to exhibit relative strength once again. Starting in the August timeframe, the semiconductors began to see some diminishing relative strength. They weren't outperforming to the same degree they had been through the back half of the summer. And they slowly started to wane on a relative basis. On an absolute basis, they didn't break trend. Just on a relative basis, they weren't going up as much as the market. When the market started to turn over, they were actually going down more than the market. And that has actually started to shift over the past couple of days. And it appears that we're in an early transition back to a reassertion of outperformance by the semiconductors. Based on a lot of the work that I do, and I've talked about this quite a bit over the past couple of years, the relative performance of the semiconductors is positively correlated to the performance of the S&P 500, and in particular, technology stocks. So as I was doing a deep dive on sector rotation in my note today, I pointed out the fact that the trend on a relative basis for technology remains strong. So we have a strong relative trend for technology. We have semiconductors beginning to reassert a leadership position, lining up with SPY testing and holding the 325 level while being in an oversold condition. So that gets a subtle shift from what we've been saying over the past couple of weeks. Over the past couple of weeks, we've been saying to be very selective with long ideas to make sure a solid risk management and process is in place. Further downside potential to the 325 area for SPY. Now that we've reached that level, we think it makes sense to actually begin to redeploy some capital back into the market, in particular the leading growth stocks within the market. Growth over value still very much in an uptrend despite the wobble. Back at the end of August, we highlighted the fact that that ratio was extended from its 200-day moving average, is now worked off that extended position, still very much in an uptrend. So I think it makes sense to begin doing some work on the leading growth areas and the leading growth companies within the market that may present some compelling investment opportunities. We actually provide a screen in our note today of just that, growth stocks that are currently oversold but still outperforming the market, as a nice starting point for doing some additional research to figure out what names to potentially start to add back to the portfolio. So I hope you found this helpful. If you're interested in reading my note on a daily basis, feel free to head over to our website, chaikinanalytics.com, and sign up for a 14-day trial. Have a great Tuesday, everyone. We'll be back with you soon.